the Hey Cruise.
Sweet.
This is
Hello.
theater. I know I don't introduce myself often because I'm the only female voice on stream, but here I am. We're starting our Mind Over Matter, the psychology of trading, for our Wednesday lunchtime weekly edition. So checking to see how you guys have been doing this morning. I know I've been trading, posting alerts, but haven't really been able to catch up. So how's the trading day going so far?
Just pretty much break even. I got burned on a breakout trade and not
Really
respecting a
choppy, huh?
range. Yeah, we're
Yeah.
going to be ranging today, and I played a breakout, so there's where I went wrong. And just two trades, nothing too much for me, but then to just catch this nice short here, so that
Beautiful.
was a nice catch.
Awesome. And I think
I appreciate that.
maybe talking about kind of those the mental transitions from being on a long winning streak, which you were green for a really long time. And I'm actually having one of the better
Yeah,
starts to my month. I think I've got 3 or 4 losses on the month that are really small
beautiful.
losses out of quite a few trades. But
Yeah, it's like
how you
half a
don't
month.
let that train wreck you and turn it into then losing day, losing week. So do you want to talk about kind of how you approach that?
Yeah, honestly, the most successful, like the best approach that I have for it is out of sight, out of mind. Because as soon as you get that little that confidence boost, if you will, and I don't know, then you start to feel like you have to win. So you kind of want to avoid that and just kind of just keep on training, keep on swimming. Just keep doing what you're doing. Just kind of leave the can't really leave the wins in the rearview mirror, but like you know what I mean. Just kind of turn your mind off. Every trade's a new trade, you're 0-0, right? And then you open a trade and it's either a win or a loss. So just focus on quality setups. And what did it for me too is I missed some time. So I had some time away and coming
Refreshes you.
back.
Yep. Recharges the
Right. Yep.
emotional battery, the
Oh yeah.
emotional bank account.
Everything. hmm And even just I felt better, right? Like my back didn't hurt as much
Right.
just from not sitting down. I mean, I made it a thing. Like that week, I did not sit at my desk. Period. Like I did
Nice.
not sit in my desk chair. And yeah, I came back and I just kind of wanted to catch up and just focused on quality setups. And it was like riding a bike, really. So
Yeah,
pretty
and that's
pretty
it.
nice.
It really does. It refreshes you, and
hmm
being able, even if it's not a whole week away, but being able to just get up and be like, oh, what am I on my day? Let's see, 8.48% on my 25K futures account. I could get up and be done for the rest of my day. I
Yeah.
like watching charts, so I'll probably trade some more this afternoon, but I don't have to. And that's one of the great things about trading is if you can be really deliberate in your executions, you don't have to be in front of the screen the whole day unless you want to. And getting up and stretching. I heard Ben mention this earlier to get up and stretch. It's
Oh yeah.
drink water, get up and stretch, go walk around the house. You took a 5 minute walk break. It's critical to be successful long term, to take care of yourself physically and mentally, which means real world stuff. Get
Healthy
out,
body, healthy mind.
yeah, get out, get
Yeah.
some blue skies or some gray skies, some kind
Mhm.
of light, real light in your eyes makes a huge difference from a mitochondria perspective, aka your energy, and a mental perspective. And I like to mention that trades are a lot, for me at least, I look at it a lot like if you're taking it into an outside kind of environment, thinking about it in a different way. So I think about it like dating. And I've been married a really long time, but I still remember a long time ago. If you're dating somebody and you kind of get an established, like, how you guys interact and how things work and what you need to do, what they feel like is important, how you interact, and then you break up, then you start dating a new person. What worked for the last person is probably not going to work for the new person. There might be a few things that carry forward, but it's going to be a
That's usually is
different
the goal,
person,
right?
right? That, a lot of times, yes. But sometimes you did, some things very successfully. Maybe they broke up with you and you were like, well, this part was really good. I'm going to do that again because I felt like she really liked that, or, whatever. And it doesn't work for the next person. And then you're mad, surprised, whatever emotion you want to put in there. But it's the same thing with trading. It's a different set of market participants, even if the setup's the same. It's a different set of people trading it. And while for the most part, those that are moving the market are all trained from an institutional perspective, like the larger traders, to understand what this type of price action should be, it still is not the same. So you have to be looking at each new relationship, which is your trade, as a completely brand new set of rules. That you've got your rules that you follow, that you're executing trades from, but you're not thinking about what happened in the last one other than, did I do anything that I could have stayed in the trade longer? Did I miss something as far as my signals go? But you're not basing any decisions in this trade on the last trade. It's just like brand new paper, pages blank. We're writing a new story every time we take a trade. So anything come to mind for you for what we've been seeing, this crazy short covering gamma squeeze insanity, which we're, trading very well, but what are your thoughts,
Oh
what
yeah.
you'd like to tell people about what we're experiencing right now and kind of as a tempering concept?
Well, yeah. So we're a huge part of why we're trading this so well is number one, we're not fighting the trend, and whenever you have a move like this, it's still really important to still just trade for the day. Don't don't get caught up in too much bias of, oh, we're inflated, or we're extended up. We need to come back down, because that's where actually I formed a bias like that the other day, and that was actually the worst. That's whenever I took two losses, and that's why I took the two losses, because I flipped the bias, and then I didn't quite have the validations on the chart that I wanted, but I had a bias formed. So I went short, and that's where I got burned. And I feel like that's the number one Achilles heel with a strong trending market to either direction. If you're in an uptrend, you're gonna get burned on playing, playing not playing puts, playing against the trend, and then vice versa in a downtrend, playing calls. But the trend, you just got to go with it. If you miss the ride, you got to wait for, you got to wait to get back on it. You can't just join in late. And I think that's that's how you trade these, and you just kind of keep an open mind. You don't think too hard of where we're at on the charts, even as extended as we are. If the setup's there, the setup's, just take it and make it quick, and just mainly don't fight the trend.
And as we're talking about that, there are some really successful counter trend trades that we see that we
Oh,
take.
absolutely.
But the general rule is, unless you have an established win rate, unless you've gotten established consistently profitable on those types of trades, it's better just to trade the direction. Because those are often when we've got, and today, not so much. Today is very choppy and nice tradable range. But when you've got those trend days and you're taking shorts, you're not going to marry them. You're not in them for a long time. It's like 1 to 2 minute trades. Those are very hard to alert. So we really try not to, for the most part. If we have a profit target hit, we will exit it in shorter amount of time, but we really try to pick setups that are actionable, so that there's probably going to be a back test to our entry levels, or some consolidation just above, and a little bit of time for the trade to grow, because I think that's really what is most helpful, so that you can analyze the position. And a lot of you guys know what we individually trade, but to be able to even reverse engineer. So even if you missed a trade that we're alerting, to be able to go in, and I would say this is probably one of the biggest gold mines if you're not doing it, is to take a blank chart after we've done a trade. Say you missed it, say you took it, whatever. To understand it, take a blank chart and try to back into what we were seeing. That's where you're going to really, really start to learn. It's a huge, huge tool, very underutilized, but I do get just enough people telling me, okay, after I watched that, I couldn't figure out why you took it. Took a blank chart, and it was like, boom, there it is. So making sure you're not overcomplicating your charts. And I stream my 30-minute execution chart because it helps people visualize what those levels are. But the bear chart will also tell you the same story as you get better at reading it. Mine just has the visual marking of the volume levels. And our goal is to teach you how to trade alongside us, not following alerts. Use us as confluence, use us as, like confirmation of, dang, I'm in that same contract, or wow, my fill was quarter point below Cedars, or that's what we really want to see. We really want to be developing excellent traders as we grow our trading community, that we're trading together, not a couple people who are good traders and a bunch of people who are like, just tell me what to do. We help you make money while you're learning, but then want you to grow. We want you to continue to benefit from the community part of it, but not have to be dependent on alerts.
And all of you guys hearing voice, and I feel like you all, if you're here, that's your main goal, which is, you have your head screwed on straight. So love that. I love seeing you guys all in here daily, learning. That's also why, we're in here. I don't have to be here. Cedar doesn't have to be here. Live trading,
Yeah.
but we want to teach you, right? And we want to form a community to where it's a ton of successful traders, and that's just going to make
And then all
that's
of
going
us
to
are
be
helping the newer traders, right?
then
It's
then we're
it's
all
paying it forward.
just making money. Yep.
Mm-hmm.
And that's why I'm so transparent on, all right, like this is this level, all right, and this is where I'm getting the level, and you see how that's respected, and it's the same levels every single day, you guys. It really is. Plus a few extras that, like this one. This is not the high of the day. This is our first initial high, but it's just a top for me. So that's an extra level, of course. But then you have your high of the day, this right here is your pre-market high. You have your pre-market lows down here, right? And this was our intraday demand, and then our intraday supply up here. Now we're testing previous day highs, right? And then your previous day close is that dotted
Yep.
white line right here. And it's the same levels every single day.
The idea is to make it boring and routine so that you're
Yeah,
happy with your execution. You're not worried about anything else, where it's just
it's almost
automatic. It's push
it's almost
button.
muscle memory.
Yep.
Yep, literally. And that's kind of hard for me to explain, and I'm glad that you think the same too. But it's like trading is literally almost like muscle memory now at this point.
Yeah. And it's
It's just
the
like, oh, this
closer it
is
gets to
that.
that, the
That's
more
it.
relaxing it is. So if you're still
Hmm.
experiencing stress trading, that means you have not hammered in exactly what you should be looking at. You're kind of all over the
Right.
place, trying different
Right.
things,
Hmm.
and trying something for 3 times, 3 trades, even 3 weeks probably is not enough time unless you are a very high volume trader to get a good
Hmm.
cross section. You want to give something a really good chance to see if it works for you, because bouncing all over the place and trying 15 different things a couple times in a row and then back to the other thing and then back, it really, it creates kind of a chaotic mental place, which also, it's that whole 30-point IQ drop. Like, you might have been pretty smart at like a 140 IQ when you came into the trade, and now you got a 110 as soon as you got money on the table. So it's
Yeah.
it is really important that you're making things as measured, as metered, as deliberate, repeatable every single day. So it's just rote memorization of, these are
The
the
more
things I
you
do.
see it, the more, yeah, the more you see something, the better you'll get at it, right? And if you're looking at different things every day, then how are you gonna
Right.
improve the strategy, right? So you see the same interaction every single time, every day, right? Multiple times per day. You're gonna know how that, you're gonna know when, you'll get that feeling and just be like, oh, I've seen this before, right? And it's just I've seen this almost every day for the
Mm-hmm.
past 2 years, right?
Right.
With this strategy or however much, and then it's just it's literally like something just triggers and it's almost muscle memory. I'm telling you.
And the idea is pattern recognition, not pattern like, bull flag, bear flag, or head and shoulders or whatever, but
Hmm.
how how the tick by tick is moving, what those patterns are that are on the particular tickers that you're trading, on what the tempo feels like when you're watching the candles on smaller time frames, which is one of the reasons why I keep a 5 minute up. It lets me kind of see a little deeper into that price action. So even though I'm primarily trading off of 30-minute candle closes, for confirmation, I still want to see what that flex is. And you'll see me every once in a while say, this price action is dangerous, or I don't like this price action. And it's because I've seen it before and gone, yeah, I'm not reading this well. So it cost me money to learn that lesson. But once something costs me money, it's a lesson. I'm not going to jump back into that snake pit again until I see some confirmation of direction. So I had planned on talking a little bit about the psychology of money today, even though technically these episodes are about psychology of trading, but there's so much connection between money and trading that I think if we can get a little more solid in what we're doing with our personal money, with our business of our trading that we take the income from, hopefully that's the ideal end outcome, and kind of go into some of that. And I'd posted something in the psychology channel as weekend homework back in May. So I'm going to go ahead and post that in Market Talk. And then I'll go into those
I like
points
the idea of
that I
that. Yeah.
extracted out of that, because I was like, this right here is gold.
I do like that, and Ben and I had touched on that just a little bit earlier, but we're just we mentioned that whenever, and I feel like whenever you do start trading, and it's like everybody goes through this, right? You're looking at how much money you're making, not you're not looking at a percentage base. You're looking at it as, oh, it's only $50. It's only
Yeah.
$20. I want more, right? But what percentage is that, right? You build that over time. And for some reason with trading, it's $50 or $100 isn't enough.
Right.
But if
But then
that
you lose
was money in
2,000.
front of you,
Right.
yeah. But then if that was money in front of you, like on the
Yeah.
floor,
$100 bill,
like
pick it
there's
up.
no doubt about it that, yeah, exactly.
No one else is
So
around. You're not taking it from anybody else. Streets are empty. Why would I not pick it up?
oh, I mean, even if there are people there, I'm still grabbing it.
I don't know.
Thank you.
It kind of depends on proximity for me, because
I
somebody
guess
might
it
be like
does.
patting their,
Yeah.
patting their pocket, like, oh, dang, did I lose my wallet?
Well, I mean, yeah.
Yeah, yeah.
That's their fault, man. No, I'm just kidding.
Get the right
But
damn
yeah,
money clip, man.
right,
No.
right. Nah,
Yeah,
I'm
but
just
it's
kidding.
but
But
the
yeah,
idea is, it's free money that's sitting there in your account. And I see so many times it's like, no, I don't want to take 10% on a trade because I'm holding for
yeah.
longer, but now I'm going to take a 50% drawdown. And I'm like, what is the logic in that? I mean, come on. Let's
It's
de-risk.
just greed. It's
Yeah,
greed, which is a natural human instinct, and it's not my fault. It's not your fault. It's not our parents' fault. It's just
it's human
that's
nature.
humans. It's greed. Yeah, it's literally yeah. So
And I was
we just got
talking
to
with a
fight back with those.
coaching client last night about, taking it. And as you guys know, I always try to take it in outside professions. So let's say you're in surgery, you're going to have your gallbladder removed. What are the chances that your surgeon gets in there and goes, I'm making some really nice money doing this surgery. I think I'm going to go ahead and take the appendix out too, just while I'm here, right? Greedy to make more money. They don't get greedy when they're in there for an operation. They're in there to do a job. It is structured, rules based. If I find this, I do this thing. If I find this, if we have extra bleeding, we've got the clamps, like they're prepared. They've got the tools to be able to deal with whatever situation comes up. And they don't get FOMO. Oh, damn, I missed out on this thing. They do what they need to do in that procedure and stitch you back up and send you on your way. And they might say, hey, while I was in there, I noticed that, there's a little bit of blockage, or, it's something we definitely should look at as you're coming out of the surgery. They're not just like lumping in a bunch of other stuff because they're going to make money because they happen to be there. It's deliberate. They're doing their job. They're executing their trade, their profession, as they are trained to and as they have practiced, which doctors practicing, that term has always scared me a little bit. Like, don't practice on me. Like, I want the actual execution, but that's another discussion for another day, the practice concept. But we practice perfect. Practice doesn't make perfect. Perfect practice makes perfect. So if you're trading a sim account or a paper account to practice, but you're way oversized compared to what you're going to be trading. So let's say it's $100,000 that the account gives you, but you're going to come trading a $5,000 account. You should be ignoring the 100,000 on your sim account and going, okay, if I have $5,000, my max trade size at 5% is $250. So your brain gets used to seeing a trade that's 250, gets used to seeing consistent profitability off of that 250. So when you transfer to money, there's a better brain connection as opposed to you've been trading $20,000 positions because you're on a 400,000 sim account that you've grown up. And now when you get to trade $250 compared to 20 grand, all the dopamine push, right? That dopamine button is what you've been seeing with those $20,000 positions. Now your brain's like, whatever, this is dumb, right? And it's underwhelming and makes us underperform or oversize even worse. That's terrible. So some of the quotes that I had pulled out from this, and this is it's called The Psychology of Money audiobook, and I have the YouTube for it linked in the Psychology channel, and I also just linked that post in Market Talk. So first one, when people say that they want to be a millionaire, what they might actually mean is that I'd like to spend $1 million, and that is literally the opposite of being a millionaire, right? So they're thinking about exiting the money, about possibly enjoying the money, spending it, instead of how to create it and how to maintain it. So the goal is to not have the money to spend it. The goal is to have the money so that you can profit from how that money is deployed so that then you can enjoy the money you made off of your money, not to spend that money. And it's a growth mindset thing. Next one is there are a million ways to get wealthy and plenty of books on how to do so, but there's only one way to stay wealthy. Some combination of frugality and paranoia. I think last week we talked about fear. Fear is good. The paranoia about losing your account will keep you alive. Fear of getting carjacked and checking like in your back seat before you get in your car, you're probably less likely to get carjacked. Same thing, paying attention. That little bit of paranoia is healthy and solid. Next one, a genius who loses control of their emotions can be a financial disaster. The opposite is also true. Ordinary folks with no financial education can be wealthy if they have a handful of behavior skills that have nothing to do with formal measures of intelligence. So you don't have to be smart. You do not have to be a genius by any means. You don't have to have a high IQ, any of that. EQ, emotional intelligence, goes a long way because you're paying attention to things that maybe somebody super smart doesn't. So don't be worried about the like, I'm not smart enough. And I hear that all the time. Oh, it's only the like, I just don't think I'm smart enough to figure this out. And I'm like, all you have to do is figure yourself out, because the TA we've got enough instruction pieces in here. We can get the TA figured out pretty easily. The emotional intelligence to figure yourself out is what is absolutely critical. Next one is spending money to show people how much money you have is the fastest way to have less money. I talked about this last week a lot too. Like, why would I need a $300 pair of jeans? I really don't care. I have nobody to impress. I do what I do. I enjoy what I do. I enjoy my life. I don't have to have the handbag. I don't have to have the like bling everywhere. It's just not, it's not important. And the more you do that, the more you get caught up in that whole Joneses, kind of keep up with the Joneses, show off to the Joneses, and it will definitely make it longer until you can get where you want to be financially. Plus, who else, who you're trying to impress, right? Like, what's the point of that? Financial success is not a hard science; it's a soft skill. Where soft skill where how you behave is more important than what you know. That goes back to the psychology of trading. How you behave, how you execute. You had a good entry, but your exit was poor. You had the right thought, but you entered early, entered late, whatever, but your exit was good. Trying to fine tune those as much as possible is going to be huge, because how you behave, that soft skill, is critical. Doing well with money has little to do with how smart you are and a lot to do with how you behave. Oh, that's the next one, and that's in the same chapter. Money's greatest intrinsic value, and this cannot be overstated, is its ability to give you control over your time. So money doesn't make the world go round, but it sure makes it a lot more comfortable. So you don't want to be just focused on making money. You want to have it be a means to an end, so that you have more control of your time, so that you can enjoy other parts of your life. And hopefully you enjoy trading too. That's how you'll be in the profession long term, is the actual back and forth, the struggle, enjoying that struggle, enjoying finding where
Yeah, you
where
gotta
your
love
niche
it.
is
And
critical.
that's whenever I knew that I was gonna get it.
Yep.
Like, and this was, 7, 8, well, 8 years ago, yeah, almost. And I was just sitting there, and I was just, I still loved it even though I was losing money.
Yeah,
And
exactly.
it's
Like
just,
obsessed even more.
and I was just like, what the heck? And every time I got paid, I would deposit some and then lose it. And it was just a constant loophole, but I still loved it. And then I finally just started saving up for an actual like sized account where I could actually, start to build. And yeah, that's when, but you
It
gotta
kind of,
love
yeah,
it.
kind of like digging for gold, right? So you're digging and you find little chunks, little flecks, little pieces. But your theory about, from a geology perspective, where this vein might be, you're going to work your butt off for measly pennies, or even losses, because you spent money buying tools and time and energy, and eventually you
Right.
hit the gold vein, and that is becoming consistently profitable. You're still going to run out of this gold vein and move to the next. That's adapting your trading style, or adapting to changing market environments. But once you got it, it's like you can smell what's going to work. And that's not like, I feel like this is a good place. It's because you've seen it enough times that you're like, oh, as we get closer, we start seeing more quartz, because the gold and the quartz kind of come together. Little side note, my dad was a geology PhD, so spent a lot of time in the backcountry. Um, let's see. Savings can be created by spending less. You can spend less if you desire less. And if you desire less, if you care less about what others think of you. That goes back to the, trying to impress people. Who are you trying to impress? I don't have anybody to impress. I want to live my life how I want to live my life, and do the things I want to do. And if I happen to come, shoulder to shoulder with other people who have that similar kind of concept, then we'll probably be friends. And if I don't, it's just a, friendly wave to the neighbor or whatever. But what other people think of you is none of your business. It doesn't matter. Does not matter. If you do what's right, if you do what you need to do to take care of yourself, your family, your community, it doesn't matter what other people think. As long as you can sleep well, you're doing the right thing, life is good. And then the last one is, wealth is hidden. It's not income spent. Wealth is an option, not yet taken, to buy something later. The value lies in offering you options, flexibility, growth, to one day purchase more stuff than you could right now. And the stuff is a dangerous thing to fall into, but one of the things that really I tried to impart to my kids is, okay, so you're thinking about buying something. Let's say it's a piece of gaming equipment that's $400. And you've got the $400, you've got your job, you're working part-time while you're in school, so you're making money sitting in your bank account, it's burning a hole in your pocket. But what you have to do when you're creating that delayed gratification piece is add a zero to the end of anything you're thinking about doing. So out to dinner, it's your third time out to dinner this week. It's fine to go, have meals and stuff like that, to not probably do it every night, because that's going to put you backwards. But so $400, the lifetime cost of that piece of equipment or that thing that you did is not 400, it's 4,000, because your opportunity cost, what you lost out on being able to compound that money into over the say the next 10 years, is a lot more than the $400. So it starts to kind of scare you a little bit, be like, oh, 4,000, oh, 4,000, or dinner, that's going to be $100. No, it cost you $1,000 to go out to that $100 dinner. Over time, especially if you're doing it frequently, it really puts you backwards. So paying attention to the fact that we eat out as a society so much more than our parents, grandparents did. They'd go out for, once or twice a month, maybe once a week for dinner, or maybe Sunday lunch after church, but it was not all the time. And we're literally, the state where I am has more restaurants per capita than I think any place else in the nation. And we got some really amazing food, but we're a very poor state collectively. The fact that a state that has this low of per capita income has the highest number of restaurants and then casinos. Holy moly. Woo, okay. It's kind of a recipe for disaster. It creates that never ending loop of poverty or just above poverty where you're just basically living month to month, which, man, I don't think anybody's happy there, but they're comfortable, which goes back to the comfort zone that we recorded last week. But those are all my bullet points. It's an absolutely phenomenal audiobook on YouTube. So make sure you're going to check that out. It is in our psychology channel and also linked in Market Talk. I am out of time other than checking to see if Cruz, if you have anything to add into those thoughts.
No, I think that was all well said.
Awesome. And I am trying to prepare something if we're like seeing, because early on when we started doing this, we were doing it in response to the massive amount of struggling that we were seeing from our members inside Market Talk and just comments of like, dang it, I did that again. And there's always going to be people learning and that whole need for us to talk about psychology. But I also want to start branching it out into things that are, as we're, collectively growing as a community and becoming better with our money, better with our trades, and better humans in general, that we are, looking at other aspects that can make us better traders. All right, I am going to wrap up this recording and I'll see you guys back on Voice in about an hour.
Cool.
And watch that previous high of the day, because recapture of that on 30 minutes, we might go back and I still think we take the overnight high. And reminder, 22% of the time we've taken the overnight high and low. We've only had 4 trading days this year that we have not taken out the overnight high or low on ES. Today could be number 5. It's a pretty low number.
Very choppy.
But yeah, it would not be surprising.
Yeah, I'm not expecting too much. I was probably about to step up for lunch here soon.
Nice. Okay, we'll see you
let everything chop up
in a little bit.
Yeah.
Okay.
Yeah, I'll see you soon.
Later. Thanks, D. Cruz.